Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone's doing well. Hope you had a good weekend, getting ready for the September trading season, the month of September to kick off. Volumes coming back. Volatility is here. If it feels a lot like August, that's because it is still very much behaving a lot like August. We're going to jump into the economic calendar to kick off the week. Very quiet in terms of data here this Monday, moving out to Tuesday. Pretty quiet 10-year bond auction, 1 o'clock. So that might be interesting for the afternoon session. But we kick off this week in a very, very, very quiet way until we get to really what will be the real start for the week. And that's going to be Wednesday's core CPI. Now, this is not the Federal Reserve's preferred inflation metric. It is, however, the one that probably most reflects what we here on Earth tend to experience as inflation. Now, the Federal Reserve prefers the PCE. And if you ever want a really good laugh, go Google or maybe go to ChatGPT and ask ChatGPT, what is the difference between CPI and PCE? And it will tell you. And it is laughable. They're two very different calculations. However, it is the PCE that the Federal Reserve prefers, but it is the CPI that will be the second most impactful inflation metric we get. And this is going to be just, really, if you think about where we are in terms of the countdown to the next Fed meeting, where we are expecting a pause, which is actually 9 days from today, we are expecting nothing to happen. It's 93% probability that the Federal Reserve is just going to pause and, suggest they'll make decisions as we go along. They get October off. So that means the next meeting, the next chance of maybe that quarter-point rate hike will be in November. But it's data like the CPI, both in September and in October, that if they are running higher, could increase the probability of that quarter-point hike. But if they're flat or even tick down, the quarter-point hike for November or December, which is not out of the picture, will tick down as well. So this data does matter. Don't let the September pause throw you. The economy is basically relying on the Federal Reserve to either pause or maybe hike, right? So what's the best way to react to this? Every time we have a data result about jobs or inflation, look at November, look at December, because that is what the equity markets are reacting to, that view of the economy and those decisions that are going to happen one of the 2 last months of the year. All right, so that's your macroeconomic overview. PPI, core retail sales, unemployment claims on Thursday, Empire State. And I'll tell you, there's a sneaky little hot zone on Friday. And I would say this is the second most important hot zone. Yes, more important than probably PPI. And that is that preliminary University of Michigan inflation expectation. It's a stealthy little hot zone that has been creating a lot of volatility. So keep those in mind. So next 2 days, pretty quiet. We are also in the blackout period, right? We had a couple Fed members speaking on sort of the very edge of that blackout period, but you'll notice here, no Fed speaking. It's not that they're not allowed to, they're just very discerning about saying anything within this very tight window to the next meeting. So you'll see very little, if nothing, right, in terms of FOMC speak. So it's pure data releases from now to the 20th, as you can see here. So now to the 20th. Okay. All right. So moving on to what we have going on with the charts. And let's jump on over to, there we go. No, where is the chart I'm looking for? Oh yeah, where is the chart I'm looking for? Oh gosh, is it closed? I must have closed that chart. You know what? That's a good reason to jump on over to TradingView. I closed my charts that I was using from the class this Saturday. Big shout out to those of you that were with me for our class this weekend. And love that so many of you are saying, hey, Rog, we've taken futures classes with you before. We've done day trading classes with you before. We really don't know how these HPMRs work. And we don't know how you trade options exclusively. And that was really what this class is about. By the way, it's still going on. As we talked about on Saturday, that first 4-hour class is really step one. So if you want to join the class, it is still underway. We have a bonus session today at 3 p.m. Eastern, where I'm going to dive into TradingView and Thinkorswim, talk about order entry, talk about the way that I lay out my toss, my TradingView, how we set alerts, how I set alerts up for trade entries and exits, how I set alerts up on the value of an option. In other words, how to make your trading platform your trading partner. So that's today at 3. So there's still plenty of time to join us for the class. Of course, the class is archived. The slide deck is now available. The class resources are available. And then we're going to start to get into our Sector Secrets Mastery, which is part of the class, and also the live classroom session. So we take the class, we go into the live market, and all the things that I taught, we're going to now see how it behaves in a live environment, which is always the fun part. All right, so let's get to our questions. As always, the best part of our show, we're actually going to be looking at some TradingView charts this morning, which I haven't done in a while. So let me make sure I've got the daily and the 5-minute here. Let's take a look at what we've got going on. And first up is good morning. Great to see everyone. Any thoughts? Hey there, Ryan. Any thoughts on DDOG? Sure. Jump on over there. So I'll open up the daily time frame. One of the things I've got to say about the TradingView charts, for those of you that may or may not be using them, and you might say, Rog, what's the point of having 2 platforms? Well, first of all, redundancy. If for whatever reason my toss charts are not behaving, no worries. I've got the backup of the TradingView. And then at the same time, if I want those alerts, if I want, where's my phone here? What the heck is, there it is. So if I want to be able to look at charts on my phone, let's say I have to leave the office, or I'm going from one office to another, whatever it may be, all of a sudden, and I don't know that you'll be able to see this, but my HPMRs, my wave, my grab, my multi-trend, everything is available on these charts as well. And I love the fact that I can get, and I'm trying to see if I can get to show you, but yeah, it's amazing to have the charts right on my phone. The alerts show up on my phone, and it makes it really easy to be able to have literally my trading setup in my pocket, in my purse. So this is a really, really, really powerful platform, and it's broker agnostic. So we get quite a few members that say, hey, Rog, I can't get toss, and no worries, because all the indicators that I use on Thinkorswim are available on TradingView. But there's one cool thing that TradingView has that I really love, and that's along the right edge. If you see in really kind of a light gray, that's the volume profile, which is really pretty cool. The volume profile lets me see the price-based volume support and resistance. I call them volume ledges because they kind of look like a ledge. And actually one of TradingView's, I don't know what you want to call it, representatives, one of the people they pay to talk about TradingView is Alex, Henold, the guy who scaled El Capitan. I'm sure some of you saw that documentary from Nat Geo. So what a great analogy, because, great climber. And that's really what price-based volume shows you. How can you climb these price-based volume levels? So that's a really cool feature to TradingView that's unique to it. One of the many reasons that I like it. So let's get into Ryan's question of DDOG. DDOG's above the 200 propulsion, the white dots. That's definitely on the bullish part of the hemisphere, bullish hemisphere, north of the equator. And then on the daily, a couple other things to note. If I look at this year, a couple interesting volume ledges, one at about 93.5, that area. Another one down here at 88.5, right? So you see how there's some different volume levels, which tell you how many shares, right? That's where a lot of shares were traded in DDOG. I would look for the long side, but be careful, because Ryan, this is a neutral or yellow trend. It's a non-trending environment. So even a non-trend is a trend. So it's on an uptrend, it's a down, not a downtrend, it's going sideways. And we are getting very close to the slow stow near the high of its reading. And that's to say we could be getting overbought, which is fine, because if we get overbought, we pull back to the volume ledge or even the 200 propulsion. I would look for possibly a buy there if you are long. And I would look pretty much exclusively to the long side. All right. Next up, Hoogly Boogly asks, I took your ultimate day trading class last year and really want to take your new class, day trading option strategy. Is the new class additional information, or are the two classes the same class? Fair question. So Hoogly Boogly, we've done, that makes me laugh just to say, I've done 4 day trading classes. Yes, every year we kind of have this annual day trading class. But is it the same class? No, the only thing that's really similar is it's about day trading. Every single class has 2 things that are really important. We're emphasizing a particular indicator from my arsenal that I've been using at least 10 years or longer. And we're dealing with a particular asset class, whether that be futures or options. And we're usually emphasizing a particular tool. Another thing that's really important about each one of these day trading classes is it's the best way to re-up your hourly price movement ranges. And that's kind of one of the other sort of hidden benefits of the classes. Every year, you've got the HPMRs, the last 2 or 3 years, as part of the class. So depending on which level you get, you could have, 1 month, 3 months, 12 months, whatever it is, of hourly price movement ranges. So you get the class, you get a year of the mastery, and you get a year of the HPMRs at the elite level. So it just makes it a really economical way to get the class, to get the access to the mastery and the indicator. So that's another reason we do it every year, just to make it really accessible to our day traders here. Is this new information? Yes, we've never dedicated a class to the basics of options day trading. I've never dedicated a class to solely that. How do we place options? How do we place alerts? How do we enter? How do we choose strikes? What's the timing? What are the windows? And then another thing that's brand new with this particular class is scalping. Lorna Bot has been testing for 2 years a scalping approach using tools that are part of my day trading approach, and one extra to help visualize momentum-based scalping. And that's another new thing. So yes, every single class has its own sort of facet of day trading that's unique to it. So I hope that helps. I would get bored doing the same thing. Hoogly boogly, I would get bored. And by the way, day trading in 2020 was a very different animal than day trading in 2021 and day trading in 2022 and day trading in 2023. So a lot of it is very much the timelessness of day trading, but also the timeliness of the way the markets are behaving now, right? So it's a unique counterbalance of something you can do forever, but how are we day trading right now? And what's the best way to do it? All right. So I hope that makes sense. Thanks as always for the question. All right. What is my take? Hey there, Richard. What is my take on CRWD? All right. This is a neutral environment. It's not that dissimilar, Richard, to the earlier question from Ryan on DDOG. So, Richard, what I'd say is we are punching up to sort of this ugly higher high, but it's also overbought. So I would say one of 2 things. We need a pullback. I'm not going to buy up here at a higher high. Where would the pullback be best? Well, take a look at some of the automated tools on this chart. The Darvis is sitting at about 155.60. I've got a volume ledge sitting at about 151. If we were to, for whatever reason, pull back to about 144, 145, that is a fantastic level, because 1, 2, 3, 4, 5 times we have bounced off that propulsion, 5 times. So we definitely want to keep an eye on that 200 propulsion, which is the combination of the fast 8 exponential and the slow 200. So those are your choices there, but definitely to the long side. All right, Brad asks, how do you turn on the side volume on TradingView? I use, Brad, what's called visible range volume profile. So if you go into the indicators and you look at the volume indicators that TradingView makes available, look at the visible range volume profile. And that is the one that I use. That is the one that I prefer. All right, next up is, let's see here. Questions. How are we on time? Okay, we still have a little bit of time. So let's see. Actually, I didn't miss anything. Um, Bear with me, gang. Oh, is that it on the questions this morning? Everyone's kind of off to a slow start. Caffeine hasn't kicked in yet. I've been up since 4. I've had way too many espressos. Let that be a warning to the folks in the mastery this morning. We're going to go full steam ahead. Looking forward to a lot of new members in the mastery and getting some day trades going. You know what? Let's do this. Let's talk about what I'm going to be doing this morning. What is this morning looking like? What are the setups that seem to be in play in terms of structure, right? Let's start. So you're getting a little bit of an insight of what we do the first few minutes because looks like the questions are up. Okay. Yeah. So let's talk about a little bit of what I'm going to do in the morning with the mastery folks. For those of you that are wondering, yeah, Rag, I'd like to take the class, but give me an idea of what this is going to be like. All right. I'm going to start off by talking with the mastery members about the economic events that are going to come up this morning. We've already looked at that, so you've got that covered. The next thing I'm going to do is I'm going to take a look at the 4 indices. We're going to take a look at the NASDAQ, the Dow, the Russell, and really the S&P. And in that order, I think the order is kind of important. NASDAQ, tech, Apple, Microsoft, Amazon, Tesla, Meta, Google, add in semis, NVIDIA, Taiwan Semi, right? What kind of mood is the NASDAQ in this morning? We are starting off with an uptrend that's been in place since roughly 7:30 Eastern. All right, so we've got an uptrend to kick off the morning, right? When the bell rings, pre-market has been bullish. Same thing on the S&P. All right, so S&P started a little bit later, though. You see how the S&P did not kick in their uptrend until almost 45 minutes later. That should tell us the S&P is keying in on something else other than the pure tech relationship that it has with the NAS. And this is why, right? So if you look at the NASDAQ, then the Dow, you realize the Dow is not in an uptrend, gang, and that's what's keeping the S&P from being in lockstep with the NAS. So neutral Dow, bullish NAS. Let's go take a look at the Russell. It's a little bit bullish. All right, so right off the bat, I've got some directional bias. Just in those few moments, gang, whether you know it or not, you've got a hierarchy of what you'd be willing to buy and what you're going to be willing to be a little bit more neutral on. So immediately we have gone from what are we watching to a focus list, right? Rather than scanning 3,000 stocks, rather than looking at hundreds of names of which we may not really be familiar, we're looking at a very specific group of indices. This group of indices then takes me to specific sectors, whether that be XLK, XLC, XLY, semiconductors, right? And then regional banks. Those are the sectors to watch this morning because that's what's going to tie to the indices. Now, this is very much one thing's connected to another. It's on a different set of connections every day. So right off the bat, I've started with indices, index, sector, stock. I know a lot of you have heard me talk about this. So right off the bat, I'm looking at the indices. What's leading, what's lagging, what's up, what's down, what's neutral. That's then going to map to the sectors that are weighted heavily in those indices. Then I'm going to go to the stocks that are heavily weighted in those sectors. And within that scan, which is very much a scan predicated on the structure of the 5-minute chart, up, down, sideways, I already know what likely I want to trade, what's a relative performer, and the way that I want to trade it. And so when people ask, how do I scan? You just got a quick look at that. So we're going to be jumping into the mastery here in a few minutes. If you haven't already, check out what we're doing. And actually, I would even say if you want to check out the webinar, right? You go to simplertrading.com / what is it? Gain? Yeah. You can check out one of the previous webinars, get an idea of what we're doing. Then make sure you decide by 3 p.m. today so you can join me for the bonus session. But of course, everything's recorded. All right. So we're just in the very, very early stages of what's going to be basically a month-long process. Hope you get to join me there. And let's see if we can make September as good as August. Be good to each other, gang. I will talk with you soon.